Hi everyone. This is first video we are making from Indorse Financials. So we would like to start sharing our views whenever it is possible, and we would like to add all those to our new YouTube channel that's we are starting. So now we are in 30 minutes chart. We usually trade on 30 minutes chart. Yeah, we do track 5 minutes and daily, monthly, weekly, but most of the times we do chart reading in 30 minutes because every trader need to have some time. We are not machines to make decisions and to punch the orders, so we need some time to respond to the actions that's happening in the market. So this is a Nifty chart, Nifty spot chart. So we have drawn trend lines where Nifty is moving in downward trend line, and we do mark the Elliott Wave corrective pattern ABC, and we did verified the Fibonacci extension of C wave comparatively with the A and B, and it looks like it made 161.8% of A wave, and now it looks like it's moving upward. However, we do see it as 1, 2, 3, 4, 5 waves, and if you want me to label it, I can label it as 1, and let me pull it down a bit, and 2, and now it's 3, and it's possibly the 4. Okay, tomorrow that it's going to happen. I don't know where it went. Yeah, it's 4, and possibly it could go all the way to touching the trend line that shown in thick lines. Let me remove these lines. I have done two downward channels because I have tried to have lines on the top and then the bottom, and at the same time from bottom and then the top. So it's a slightly different ranges of the trend line supports and resistances. So right now we are at 8,109, and there is a chance that it can come down back again to complete if it's a 5 wave. So I would bet that nobody in the world could say whether it's a 3 wave correction or it's a 5 wave correction at this point of time, because well, it's still in a sideways zone with no confirmation. So for now, we have seen today a kind of complete range bound market, and for last 2 days it's kind of range bound, and now we are expecting that it could correct downwards till the end of this channel. Why we are expecting it is, if you look at 2 days ago, that's on 26th December, it gave a gap down and then started moving up. So in any case of the stock movements or index movements, so whenever you see a gap down and then moving upward, it should give a close m- higher than previous day's close. That will confirm that trend is reversed with a piercing formation. So we will be making another video on candlestick patterns and what is the important of each kind of formation. So but for now you should note that the close should come higher than previous day close of gap down day. Here it's been 3 days, it tried to move above the close of previous day to the gap day, but it didn't sustain. It's continuously push it down, and it couldn't give a close above it. So we are expecting a move downwards till end of the channel to complete 5 waves. There could be two different possibilities. So possibility one is it may start at the trend line and then start moving down tomorrow, or it may give kind of gap down and then move downwards. So we are expecting it to be 5 wave correction, because usually C wave will make 123% of the move comparatively with A and B. But here we see 161%. So usually in third wave we see 161 and 216 percentage. So we consider it as a three wave, and now we are almost done fourth wave, and we are expecting it to move downwards till the low of third wave to complete the fifth wave. Okay, so we will see after the move that it happened as we expected. If not, we will revise our chart reading and see how it goes. See, it's all depends on how market evolves itself with the demand and supply and the price movements. So for now, no one in the world can say whether it's a fourth wave complete, or it's a completed three wave and started moving up, because it's indecisive movements that's happening for last 2 days. Usually, if it's really end of the wave, it would have been closed above previous day's close of the gap area, and it would have started moving up, but it didn't happen. Still there is the resistance, and it couldn't even cross above the trend line. So let's see what happens. So this is how we are reading for now. And if you go to monthly chart, I would like to give monthly overview, because it will give you clear picture where market is planning to move ahead. So here if you see in monthly charts, it made a new high, but RSI couldn't make a new high, which shows that there is some lack of strength in the price movement. So it's called a divergence. So we'll be covering all these in our upcoming videos. It's just a start. We just like to share our view on Nifty. So in monthly, we see it's a negative divergence, which means stock can fall from here, either stock or index. So now it's happening in index. So because of this negative divergence, we are expecting that market is topped out for now, unless until RSI give breakout of this trend line. And here if you look at the price movement, so this month price has given a gap up comparatively with the previous month high. Previous month high was 18,816, and this month open was 871. Okay, so it's almost 50 points gap up, 50 to 60 70 points gap up, and from then it started falling, and it has also moved below the previous month low, which says that it's a kind of bearish engulfing. And now we need to wait for the close of the month, that comes on 30th, on Friday 30th December. If close comes below the close, I mean this candle, then it's going to be confirmed bearish engulfing. So whenever you see the engulfing candles, engulfing in the sense the candle which completely overlaps previous candle with the opposite direction of the move, then that we consider as a short-term reversal. So now for now we have seen it has given engulfing, but we wait for a close. If close comes little bit higher, then it could be some kind of a trap for bears. If it really gives confirmed close below the candle of the close, then it's going to be bearish engulfing. So it doesn't mean that the moment bearish engulfing comes, we go short. No, we wait for an opportunity where we can initiate shorts, so that we will be having some safety of margins and some risk reward ratios. So for now, let's see. We are expecting market to move downward to complete the fifth wave of internal wave movement. So in monthly charts, we expect 5 waves completed here, and there is a correction. We call it as a correction A wave down, and we call this correction as a B wave. And you may ask a question saying that can B wave move above the end of wave 5? Yes, it is possible, because this we called as a irregular pattern. Okay, So very rarely it happens. There is a chance that it can move up, but again you see a negative divergence and it started falling. So if it is end of B wave, we are expecting C wave equivalent to A or more than A, which will be a little bit faster comparatively A. A could be, very ups and downs and very slow mood, but C could be much faster. It could make a very sharp moves to reach, complete the C wave. So if you look at A wave completion, it's a monthly chart. So how many months it has taken? 1, 2, 3, 4, 5, 6, 7, 8, 9 months it has taken. And we might see a little bit lesser in, completing this C wave. And let's see, we have not yet confirmed. We have to wait for this month's close on monthly chart and again the next month movement so that we will conclude it's an end of up move and then will move downwards. Otherwise, we have to wait to initiate longs until this bearish engulfing is taken out. We need to wait for it to take out and also the RSI to take out this trend line. That then only you see confirmed bull trend. Okay, people may say, okay, it corrected somewhere to 17,500 and then started moving. Why can't I initiate longs? Yes, you can initiate long. If at all you are sitting with the cash at a high point of the market, you can initiate and start acquiring the stocks which are corrected well and strong. But if you want to go with no fear of bear market, you have to wait for taking out this bearish engulfing if bearish engulfing is confirmed by end of this month. So it's a long term view. Okay, and 30 minutes is very short term view. So let's wait until this channel is taken out or until it come back to the low of third wave. Okay, to complete 5 wave pattern of correction so that it might see another pullback towards 200 EMA, or let me add 200 EMA. I missed it. Usually we go by 200 EMAs because 200 EMA will give more clear picture on which side market is moving. Okay, you can consider that as a trend. Okay, so here if you look at 200 EMA, it broken here and then started moving up and then it couldn't to pass on and then start you see a bigger fall here and now it's trying there. So I don't say 4 will go and touch 200 EMA, but again you need to respect the this low of one wave. Okay, sorry, one will be here. Okay, one will be here. From B we have to look at three waves. Okay, one, two, sorry, that's a wave and this is two wave. Okay, one, two, three, four, and then five. So usually it will not move above one, low of one. If at all it surpasses this low, which is 18,204. Okay, we wait and see until it crosses to 20 something and then it holds this trend line, then we initiate longs. Otherwise, we will be short on the market with the 220 as the stop loss, and we will see where it goes. We are expecting another downward movement in the market. Okay, and here my apologies. It have to be here, and then this should be here, and then this should be here. Okay, and a little bit. I can't exactly snap to prices, but okay, this is how it is, and it have corrected up to 138%. It's a good moment, so you can consider it as a three wave, and now it started moving up, and it's the four. If four completes, then we can stay back again for fifth move. Okay, so if you take the movement of three, it should be usually okay, let me hide it if I can hide. Snap to prices is there, and I don't know, I can't hide it, leave it. I can change color, I believe. Let me try to change the color for this moment, the correction of this one. Okay, I'll try to change the color to different one, retracement colors. Let me go with red. Okay, and save. Okay, now you see the red color retracement is a retracement for fourth wave. So usually if it is a fourth wave, it will go up to 50%, not more, usually 38.2 and then 50%. So here if you look at it, it almost crossed to 50% as well. Okay, usually it will not happen, but it happened this time because channel is a little bigger, the volatility is high, so it started moving back to 61.8, and at the same time it respected low of 1. Okay, so if ending point of 1 is broken, then we should assume it as a upward movement, and now you have to wait for the retracement and then start initiating longs. Till then, wait and watch, or else go short with a stop loss at 18, sorry, 18, yeah, 18 to 30 somewhere on spot. Okay, thank you.